good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain and with me Saisha Faridi, twinning today as far as the color orange is concerned. But nonetheless, the market too is in a shade of orange/red, and I say that because we're at the lowest point of the trading session. We haven't managed to scale past the mark comfortably above 19,800 at all. In fact, we're heading lower towards that 19,750 mark as far as the indices go. Very, very broad-based cuts is what we are seeing across the board. It's Mphasis, of course, which has taken the Nifty IT in a spiral, and that's why we are seeing a cut of over 4% when it comes to the Nifty IT index. So solid cuts coming in across the board for IT company, whether it's a KPIT, a Persistent, all of them are tumbling down. Not just that, you have the heavyweight Reliance also, which is under the weather today. A cut of almost 3.5% ahead of its earnings, and that, of course, is adding a lot of pressure. So if you take the top IT names as well as Reliance, that is what the bulk of the red tick on the Nifty is today. What's putting up a fight is L&T, so that buyback news has definitely spurred a bit of a support there. So that stock is high by around 3%, and then ICICI Bank as well as Kotak Mahindra Bank ahead of their earnings tomorrow, because remember, they report their earnings on Saturday. They are fairly excited, and we have ICICI Bank as well as Kotak Mahindra Bank sitting in the green. Yesterday, it was all about weak set of earnings coming in from the likes of Mphasis, HUL and other companies. Today, it's been even, Steven. You've got a decent set of numbers come by from Ashok Leyland. Solid beat actually on the margin and profitability. For HUL Auto as well, it's a good number. HUL Limited rather, it's a good number. And for JSW Steel as well, at least better than expectation. Can't say the same about other companies. Hindustan Zinc was a bit weakish. Margin or Ultratech wasn't very healthy. So it's a mixed bag right now, but at least not as bad as we saw with Mphasis yesterday.
Oh yeah, not as bad after that FY24 guidance cut that they announced to 1 and 3.5% versus the 4 to 7% band earlier. That really saw a fair amount of gap down on the stock. Having said that, from there, we saw a little bit of a covering. And then again, you're seeing pressure build in on the stock, still lower by about 8.5% as we speak. A lot of downgrades also trickling in. Nomura, for instance, has already downgraded the stock to a reduce from the earlier neutral. They've cut the target price to 1,210. Ashok Leyland, though, on the other hand, has been a beat. The revenues have come in higher by 13.5%. They've maintained the double-digit margin, so that stock is looking good. And HUL Auto must bring up this particular intraday graph. The stock holding up almost 2% right now. But if you just were to take a look on a sequential basis or on a year-on-year basis, there's EBITDA margin has come in lower by 35 basis points, and revenues as well have slipped about almost 20% or so. HUL Auto, though, in the green as we speak right now. But let's try and understand the texture of the market a little bit better. Kunal, Naresh join in on the show as always. Kunal, definitely not 20K, not happening this week, maybe next. But do you think L&T, Reliance, or for that matter, even SBI and Kotak Bank can actually do it for the Nifty next week, if not IT?
So, if you ask me, with Mphasis down 8% and I think 3 or 4 other IT names down by 5%, 4% on an average on the top FNO names, if the Nifty is down 200 points and the Bank Nifty is positive, flattish to positive, I think I would take that any day, because after such a kind of a steep price action as well as the news flow, if the indices can remain into a tight range, 1% odd band, that would still be a good sign for the index, because there are so many other large cap names, as you pointed out rightly, the likes of L&T, etc., making a good comeback. India Mart from the mid cap names also making a good comeback for itself. So many of these large cap names are firing up at the right time or trying to support or balance the index at the right time, which means that the market has this ability to absorb a lot of negative news flow. And I think that's the quality and as well as the hallmark of every kind of an uptrend or a bull phase, that if the indices have a capacity to absorb negative news flow or events, then I think the trajectory and the trend would still be on the upside. So would be bullish, would maintain the bullish stance on the indices. In terms of support, 19,600 broadly could be a next support for the index over the very short term.
Okay, so that's a take coming in as far as the index is concerned. Naresh, what's your view at the index right now?
Index, we are down 200 points thanks to Reliance in the IT sector. But if you look at other indices, it's interesting. Bank Nifty hit a new all-time high. The small cap indices have hit a new all-time high today. So the broader momentum continues to remain the same. If you look at global indices, US indices have hit a Dow Jones gave a breakout, a new 52-week high over there. So overall, the trend is still positive. So the view is 19,600 should act as a base now. 20,000 as a resistance, and in that period again we'll see stock specific price action. We are seeing a good shift towards PSU, so the new PSEs which are coming in radar are ONGC coming close to a new 52-week high. You have SBI coming close to a new all-time high. So overall, time for some sectoral rotations.
Okay, time for some sectoral rotations, which in any case have been at play. Just very quickly, the index currently at 19,794 for the futures. India Mart is on a tear, 9.5% higher. You've got United Spirits up 6.5% in trade right now. Atul Auto, like I just mentioned, PVR Inox 4% higher as we speak, and Mphasis as well, reacting post its earnings. That stock is actually holding up 5%. But let's welcome on board Ashi Anand from Valcreate Investment and talk about what he's making of the market structure and the texture right now. Ashi, hi, afternoon. Welcome to ET Now. Good to have you on the show. Just wanted to understand your overall, thought on the market right now. While FI inflows have been intact for us, a lot of sectoral churn at play, but a lot of overvalued pockets as well.
Thanks a lot. Thanks for having me. Broadly, in terms of the markets, right, we've seen a fairly good rally in the midst of kind of a fair amount of concerns globally, right? You've got global headwinds in terms of economic growth. Valuations are a bit high, mid and small caps are a bit expensive. Consumption has also been relatively weak. Now, what's been driving this rally? I think clearly the biggest driver is the fact that inflation and interest rates have clearly peaked. You have seen the RBI pausing, and this was one of the biggest headwinds for the market over the last many months, right? So with that kind of coming down, and importantly, fund flows having turned positive. Last year, you had almost $17 billion outflows in terms of FIs. This has shifted to 4.4 billion positive in the current year. This is kind of driven by, if you're just looking at India from a global context, you are really seeing India really starting to outshine other global markets. China clearly has its areas of weakness, and I think you're starting to see flows move from China and Asia towards India, towards a very strong longer-term growth trajectory. So broadly, the way we look at markets is we don't expect a sustained bull market until some of the global headwinds, some of the kind of even Indian headwinds, consumption is a bit weak in India, until these don't kind of peter down. We don't see a sustained bull market developing. That said, with interest rates and inflation having peaked, we also so the broad idea is that markets could remain range bound over the coming year.
Okay, range bound over the near term. That's the view coming in. But just quickly wanted your take, Ashi, if you track these companies closely. PVR, of course, is one stock which is gaining around 4 to 5% higher. If you maybe look at the entire consumer discretionary theme, what's happening with respect to the QSR space, etc., anything that you'd like?
So actually, within kind of the consumer theme, right, as in consumer is a space that we do find very expensive. There are a few pockets of growth, a few pockets of value available in certain kind of companies. So we kind of we like ITC, we like Jyoti. When it comes to the QSR space, our preferred way to actually play it is via a company like Zomato. We see a lot of long-term value in digital platforms across the board. So growth from consumer growth longer term in India is very, very clearly one of the most interesting plays. We prefer playing that via the digital platform themes. We believe this to be one of the most interesting kind of ways to play the consumer theme in India. That said, within kind of QSR, things are a little mixed, right? So certain companies like Jubilant, you have issues around milk prices and raw material prices impacting growth. So it is a little kind of mixed in terms of consumption. Given how high valuations are, we tend to be very picky and very choosy in terms of how we look at playing this theme.
Ashley, since you did talk about the digital platform space, I must talk to you about the likes of an India Mart, for instance. Excellent set of numbers. We are seeing the stock as well on a tear today. And then, of course, if you've done any case study on a Paytm or a PB FinTech, where at least in terms of the stock price movement, the worst seems to be behind. But I guess with these case studies, it's more about profitability. No one's denying their long-term potential, but it's about when do you buy the stock and when do you get into it?
So we actually at Valcreate, we launched a pure play digital strategy in February this year, pretty much close to when the markets were at the bottom. We've done very very detailed work on the space, and I think there's a big disconnect in terms of the way listed market investors are viewing digital platforms. If you understand how digital platforms work, uh, all digital platforms globally and domestically have to go through 4 distinct stages of business evolution. In stage 1 and stage 2, you're really just focusing on building out your platform, trying to achieve a couple of key factors. One is becoming one of the dominant players in that particular niche. Secondly, trying to change user behavior so that they move away from traditional forms of interaction towards the platform being the de facto. Once you have achieved these 2 core goals, you can actually reduce a lot of spends that are directly linked towards trying to drive user behavior. And I'm specifically talking about discounts. These can actually be reduced very, very substantially. And as you enter stage 3, your consumers, there are no viable options any longer. You become a dominant player and users have gotten used to interacting on your platform. Reduction of discounts and the introduction of certain fees will not lead to users moving away when there are no other alternatives. Our studies have shown that over 50 to 60% of revenues are essentially related to such one-off costs. And as these platforms mature, the shift towards profitability can actually be very, very rapid. You're already seeing this in terms of numbers. So if you're just looking at post-listing, Zomato's food adjusted EBITDA has moved from -18 to 5. Paytm's adjusted EBITDA has moved from -63% to 5%. Policy Bazaar from -23 to 3%. These are actually, if you understand the core profitability of these businesses, they're actually highly profitable. It's just a question of what stage of business evolution you are. As you get listed, you're typically entering stage 3, which is monetization. You're already starting to see these numbers. And according to us, as you go into FY 25, 26, 27, these companies are going to surprise all analysts, most people on the street, dramatically in terms of just how high the inherent profitability of this business is. And that's essentially the call we are taking at Valkyrie.
That's an interesting take, but you know what, just hold that thought. There's a lot of pockets doing well. Of course, entire digital team, India Mart is something that we talked about. Tanla Solutions is the other one, which is high by 12%. Again, a result reaction coming in. But not just that, look at the rail stock. So Rail Vikas Nigam is higher. You also have Rites, which is higher by 6%. Some of the public sector banks are also perking up. So J&K Bank is now up around 5%. Bank of Maharashtra is up another 5%. And then some of the sugar stocks as well. So Sri Renuka Sugar 5% higher. Triveni Sugar is the other one. Triveni Engineering, that is, which is high by around 5.5%. In terms of the result reactions, though, quickly pull up the intraday chart of HDFC Life. That stock is tanking as we speak. The numbers are just trickling in as far as the persistency ratio sector is concerned, but doesn't look like the street is excited about that number. And JSW Steel too, which saw quite a bit of spike in the first reaction after the earnings, a solid beat at that. That's completely fizzled out, and that's now at the lowest point of the trading session. Kunal, your take regarding some of these stocks, especially the PSU banking names, J&K Bank, Bank of Maharashtra, result reactions for Ashok Leyland, Atul Limited?
So would be bullish on PSU banking stocks, and I think few of the other names I've lost account, but then PVR Inox, yeah. PVR Inox is one of the other stocks which also looks attractive. JSW Steel, I think post numbers, in fact, the stock was actually getting into a bit of a saturated phase at this 815.20 mark. I think if I'm not wrong, at least on the derivatives, it made a high of 824, 825, and from there the stock has petered down a bit. But I would believe that probably this 800, 825 mark is a bit of a resistance zone for JSW Steel. On the PSU banking stocks, I believe that many of these stocks are getting into a second leg of a breakout. Now, specifically the likes of PNB, Union Bank, J&K Bank today has given a breakout about that 72.5 odd mark for itself. Even the likes of Maharashtra Bank and UCO Bank, etc., these stocks are also coming close to their individual swing breakout. So, which means that the momentum and the push is still very much positive into the mid cap or the small cap PSU banking names. I would be very bullish on the space, not just from a short term perspective, as I mentioned earlier, but more from a medium term to long term kind of a play.
Okay, just before we take that short break, wanted the view of Naresh on ICICI Bank and Kotak Mahindra Bank as well. Both of them come out with its earnings tomorrow, but the stocks are fairly excited, Naresh.
So ICICI Bank has given a breakout above the 960 mark, which was the previous all-time high. So the target price for that case would be 1050 to 1100, so still positive. Kotak is a stock on watch because for the last almost 2 years, 3 years, 2000 has been a problem zone. If it can sustain above 2000, that is where the trend changes. For the last 2 years, it has been 8 to 10 times it comes close to 2000 and flips back to 1650, 1700. So watching it closely this time around, if it can cross 2000, it could be a leader in the banking space.
Okay, gentlemen, stay with us. Lots more to talk about. We will take a very quick break on that note. When we can come back, we'll continue our conversation with Ashi Anand, Kunal Bothra, as well as Naresh Mirani. Back with closing trades right here on ET now. Well, it's Friday and it is pouring out heavily in Mumbai. But yes, there are two movies as well, which all of us can catch. Maybe not today, but over the weekend for sure. The countdown is finally over. The two most awaited Hollywood blockbusters of this year, that's Barbie as well as Oppenheimer, have managed to hit the theatres. So what are the day one trends looking like in terms of ticket pricing, number of tickets sold, and more riveting details about the two movies? We have Sharad and Vinny walk us through all this interesting analysis that they've done.
Well, yes, two important releases coming this weekend, and this is firstly Barbie and Oppenheimer. And Barbie, there's a big question. Everyone is a Nolan fan here, and we all are very excited, be it Dunkirk, be it Dark Knight Rises, and now the build-up is coming for Oppenheimer. A first explosion, the story of the atom bomb. How interesting it is.
Absolutely, and not only that, but Barbie is very exciting as well. Everyone has a childhood memory with that, and that's what we're expecting from Barbie as well. You know, it's a family-oriented movie, more expected of family crowds coming in as well. And their marketing strategy, that's been amazing as well. Just open Google, type Barbie, you will see all those pink glitters flying around on the Barbie page as well.
Well, yes, but now let's talk about the numbers also. The advance bookings, that has been big. Oppenheimer, till Thursday, as per our industry sources, 2 lakh tickets have been booked.
Not that, yeah. Not only that. Look at Barbie's numbers also. 80,000 tickets were booked till Thursday night as well. So interesting number coming in there as well. But Friday collections, today is Friday, we have to talk about that. The expectation for Barbie is that on Friday, that's the first day that they will be making 4 crores to 6 crores approximately in terms of rupees over there, and the opening day of Barbie as well.
Well, yes, but the numbers are big. 15 to 20 crores when it comes to Oppenheimer. And Barbie, the screens, that is something which I'd like to point out. 1,500 screens, the total Oppenheimer coverage. What about yours?
Barbie, 700 screens is what we are looking at for Barbie as well. You know, interesting number there as well. But maximum ticket price, you know, how much are people willing to actually loosen their purse strings? You know, for Barbie, it's at 2,100 rupees. Maximum average price that we're looking for. NCR, Mumbai, Bangalore, those places, 2,100 rupees is one willing to pay.
Well, Barbie, the number is 2,500 when it comes to Oppenheimer. And do remember, it's IMAX release. So the costly seats would be there, but everybody would be booking. And also, Barbie, one more question is there. How about the movie ratings? Of course, Oppenheimer, as per Rotten Tomatoes, it's coming at 92%. That means the ratings is very strong.
For Barbie is not bad as well, right? Just a couple of points behind, and 89% is what Barbie is looking at. So both of them are surely leading the charts over there. And in terms of ranking also, Sharad, Barbie stands at 4th, you know. So there's an interesting number there for Barbie at least.
And it's 3rd for Oppenheimer as per IMDb. But the question remains, Barbie, is which movie will you be watching this weekend?
Is it going to be Barbie or is it going to be Oppenheimer?
Here we have decided that we're all watching Oppenheimer, but let's take the question across to Abneesh Roy as well. Is he part of that consensus? Abneesh, are you also favoring Oppenheimer versus Barbie?
Yeah, I think both movies should do well. The good part is there is no big Bollywood content which is clashing, and there is very strong buzz, and definitely because of the dynamic pricing which PVR Inox have introduced, we would expect a very strong occupancy in the top 8-10 cities. This will be a bit of niche audience, but ticket pricing will be high and occupancy should be high in the IMAX format, especially for the Oppenheimer. So this should do definitely double-digit revenues. As you also highlighted, we expect almost 12 to 15 crore kind of revenue for Oppenheimer, and Barbie should be around half of that. But definitely we expect that because of the good content, footfalls will happen. So we expect both OTT and cinema halls to survive. And the key concern has been definitely Bollywood content. But if you see in the same market, regional content and Hollywood content has been doing well. This year, the good part is the Hollywood lineup is very strong, unlike, say, last year. The other thing which we like is definitely, apart from dynamic pricing in the ticketing, also in the non-peak hours, PVR has made more affordable, which I think is a concern for a lot of customers. So whenever you don't have peak demand, it is good to really induce more sampling. And this is a good measure by PVR Inox, apart from the fact that they have this 1 rupee 30-minute kind of the, slot where you can see all the movie trailers. So overall, yes, I do expect that the footfall should be strong, but this will be strong in some of the top cities only. I don't think this is a pan-India kind of content. But then in the coming weeks, we'll have the Bollywood content also. We have a Ranveer Singh movie also coming up, which will be a masala movie.
Absolutely. But Abnish, that's the bigger question, whether with Oppenheimer, Barbie, and then Rocky Rani ki Prem Kahani next week, can it really make up for the dry spell of, not such great content or not hit content, if I could call it that we've had almost for, I think, 2 years now?
Absolutely. I think content in Hindi movies has been a big issue, and it will take time because any movie, if you see, there is a lead time before you can make changes. If you see in same market, regional content has had very compelling story, better direction, better VFX. I think the main issue for Hindi movies has been the very lopsided salary structure, where the hero of the movie was taking away 60-70% of the budget, and you did not have enough budget for rest of the star cast, good director, good VFX, proper marketing. Marketing has also been a key issue for a lot of the Hindi movies. Even if content was good, enough marketing was not done. So I would say that now if you see Shah Rukh Khan movie has been delayed. So now Hindi producers are going back to the drawing table, seeing that the gaps which are there, those are getting addressed. Adipurush, of course, although content was reasonably okay, it had 2-3 serious flaws. I think you can't have such flaws also. So overall, my sense is every 10-12 years, this kind of a issue comes once, and then it continues for almost 3-4 quarters. So it seems we are at the fag end, but definitely fingers crossed on Hindi movies. I think in the next 3 to 4 months, we'll have much more clarity on the recovery. But in the near term, regional content and Hollywood is where the probability of success is higher.
Okay, taken Avnish. So whether it's Oppenheimer or Barbie, the money is going to PVR. At least that's the benefit for them. But just shifting focus a bit, Avnish, since we have you with us, HUL and United Spirits, tale of two cities. United Spirits definitely getting the spirits high, 7% higher. What's your take on the stocks of HUL and United Spirits now?
I think one common slightly theme in both the companies is, see, United Spirits, the base business is more or less in line with the expectation. The IPL revenue was really high, almost 250 crore higher revenue and 200 crore plus EBITDA higher. And that's why we in fact upgraded Sun TV numbers also and came out with a note that all the IPL teams are seeing next 5 years very strong revenue because of the higher media rights. So that is benefiting United Spirits in terms of their IPL team. United Spirits core business of P&A continues to do well with 21% revenue growth, 10% volume growth. On the other hand, for Hindustan Unilever in soaps and detergent, regional competition has come back. So they are extra cautious on incremental advertising spends. So I would say in case of United Spirits, advertising revenue has held from IPL, but in case of HUL, clearly the margin expansion which should have happened, so which we'll see, for example, in Godrej Consumer or say Nestle or a Britannia. Unfortunately, in HUL, that is currently not happening. The company is very aggressive, and also in terms of the HF, which is the Horlicks portfolio, clearly because of very sharp price hike, volumes are negative in that part of the portfolio. So HUL currently is a lower pecking order for us versus a GCPL, Nestle, Britannia, ITC. Those would be top in terms of the pecking order.
Abnish, great to have you on the show, and we hope you get to catch one of the movies, at least Barbie or Oppenheimer. On that note, let's just shift focus. Let's get in some closing ideas as well going while the index continues to be under pressure. And it's really IT which is at the bottom of the heap. Not seeing any material improvement in Mphasis, still down about 8.5%. Unilever has cracked 4.25%. TechM persistent, IO other big losers in trade. Kunal, what's on your radar?
So in terms of closing trade, it's actually PVR Inox which is looking attractive. 1490 approximately is where the stock is trading right now. It's confirmed a breakout of a downward sloping trend line on the weekly charts. So I think that could be an interesting play for the stock over the near term.
Okay, PVR Inox, not surprised there. But Naresh, what about you?
So that would be ONGC. The stock is making a new 52-week high, a cup and handle breakout, or also a 3 to 5 year breakout in the making. So that looks very promising. Could be heading up towards 190, 200 in the short to medium term.
Point taken. ONGC is the stock that you like. Quickly, let's pull up the intraday chart of Ramkrishna Forgings as well. The numbers were just hitting the screen 10 to 15 minutes ago, and that stock is seeing quite a bit of spike. Ramkrishna Forgings is the stock that I'm talking about. It's sitting high around 4 to 5% at least on my screen. We should be able to pull that one up very shortly. The other one that we want to highlight is Bandhan Bank. There was a large trade that happened on Bandhan Bank today. So after a huge gap and huge lull, it seems like that stock is coming out of a hiatus as well. On the losing side continues to be IT all the way, but surprisingly Mahindra CIE has also joined the party on the downside now. 5% lower, Mahindra CIE, not sure if there's any increment in news flow because Dalmia Bharat was as it is down in the trading session since start because of the weak volumes, and Havells too is seeing a cut of almost 4%. But on that note, we'll slip into a very short break. Don't go anywhere. Okay, so as far as the market is concerned, there's no recovery at this point of time, just below that 19,750 thereabouts. Lots of individual stocks are, seeing a lot of action. So let's discuss all of those stocks with Chakri Lokpriya, who's joining us on the show. Chakri, result reactions coming in today. Ashok Leyland, JSW Steel, Atul Limited. Anything that caught your attention, and even Ultratech Cement and Dalmia Bharat?
Yes, indeed. Good afternoon. Ashok Leyland looks good. There's been a margin expansion. There's a reduction in operating costs, lower raw material prices. And mind you, the CV recovery cycle is still very early stages. So the benefit of the lower commodity costs that goes into the input will benefit Ashok Leyland and other CV manufacturers. In the case of cement, the volumes, both Ultratech and Dalmia Bharat, all of them showed that the volumes were strong, but the pricing is weak. And therefore, overall, in spite of costs coming off, input costs coming off, the margins are not likely to improve. Against this backdrop, it's unlikely that cement companies do well in the near term.
Okay, cement companies are not likely to do good in the near term, but Reliance Industries, do you think that is going to be an outperformer at all? Because the street seems to be going in very, very weak expectations right now.
Yes, you're absolutely right. Refining margins are likely to be weak in this quarter. And that's kind of the bread and butter of the company. But what will hold it up is retail margins should kind of improve. And most importantly, there's a ton of work that's happening in the green energy space. In Reliance Industries, I think about 100 gigawatts of renewable energy plants are going to go on stream in about a year from now. Battery storage, 5 gigawatts is what they're talking about. Very big plants, electrolyzers. So these things will start adding to the valuation of Reliance Industries and also other companies. Reliance Industries, for instance, holds 40% in a company called Sterling Wilson. Now, companies like that will also benefit a lot.
Right. Okay, that's the anticipation expectation from Reliance. Kunal, let's recheck on Reliance charts as well. What's the positioning like ahead of the numbers? I mean, it's down 3.5% as I see it.
Yeah, down 3.5%. But I think maybe over the next 2 or 3 days, we'll have to see that how the unwinding of cash positions happen and the positions back into the delivery into the FNO, because I think over the last 10-15 days, we were actually seeing one-sided phenomena where there was cash buying or delivery-based buying and unwinding in futures. So I believe that maybe the adjustment could take another 3 or 4 days, where the open interest might tilt back again into the future side for Reliance Industries. So I would not be too much perturbed. Hopefully, if it's just an adjustment from the positioning size, trying to shift from one segment to the other. But I think in terms of support levels, 2,500 would still be a reasonable, strong pivot support for Reliance Industries. We are closer to that level in spot. I think 2530 is where we are trading right now, but I think closer to that support of 2500 is where I believe maybe good contra buying opportunities could emerge.
Okay, and now let's take it across to Somit as well. Find out what the ET Now poll is penciling in for Reliance.
Well, from Reliance Industries, it is expected to be a muted set of numbers in the first quarter of FY24. Now, if you see the revenues of the company, they're expected to decline by around 8% The EBITDA is expected to be lower by around nearly 1%, while the net profit is expected to fall nearly 15% on a sequential basis. Now, the fall in net profit is higher because in the fourth quarter of FY24, that is the FY23, that is the base quarter, the tax expenses were lower, and hence we are seeing a sharper fall when it comes to the net profit number. Now, segment-wise, if you see the retail segment revenues are expected to be 4% higher, but EBITDA number is expected to be higher by around 2.5% for the retail segment. Now, the reason behind this lower retail segment EBITDA growth is the fact that the fashion segment, that is the high margin segment, is expected to be weak in the first quarter of FY24. When it comes to the O2C segment, we are going to see a disappointment on that front, and that is the main reason why on a consolidated basis, the Reliance Industries numbers are sequentially lower. Now, OTC segment EBITDA is expected to be 4% lower on account of sequentially lower margins, and also given the fact that there was a shutdown in the Gujarat port because of the cyclone, and hence the sales volume also coming in, or the export volume coming in for Reliance Industries are also expected to be on the lower side. When it comes to the oil and gas exploration business, the EBITDA is expected to be 4% higher sequentially, and this will be purely on the back of a higher sales volume in the first quarter of FY24. To sum it up, O2C segment is expected to be a disappointment, while the exploration and retail segment growth is expected to be around 4% in the first quarter of FY24.
That's the take coming in. But Somit, since you're with us, talk to us about Jio as well.
When it comes to Reliance Jio, if you see the revenue and EBITDA, they are expected to be higher by around 3%. Margins are expected to come in at close to 52.5%, while the net profit number is expected to be 2% higher. Now, ARPU, which is the key number for the telecom operator, that is expected to be higher by around 1% to around 180.7 rupees per user per month, while the subscriber number, we are seeing a good growth on that front, at least from 43.9. That number is expected to come in at close to 44.7. And do remember, this is the fifth consecutive quarter where Reliance Jio has been able to add subscribers on its network. Now, subscriber growth is the main reason behind the growth in the financials of Reliance Jio in the first quarter. The 3% growth that we are seeing on revenue and EBITDA front is purely on the back of higher subscriber base. Along with this, rising contribution coming in from the home broadband business and a higher number of days on a sequential basis is also the reason behind the growth in the financials for Reliance Jio. Now, apart from the numbers of Reliance Industries and Reliance Jio, the key things to watch out for from the earnings would be any update coming in from Reliance Industries on the fact of tariff hike going ahead, what is the sales number of Jio Bharat phone that they have recently launched, and how is the traction that they're seeing on the home broadband business would be important to track. Also, any news flow on the Jio Financial demerger and any roadmap on the new energy business would be keenly watched out for from Reliance Industries earnings.
Right. We leave it at that, Somit. Thanks for highlighting what to expect from Reliance Industries. Just take stock of what IndiaMart as well has been up to. That's looking pretty strong after a big beat on its numbers. And then HUL Limited as well. The stock also holding up as we speak. That is currently higher by about 7.5%. L&T after that buyback news, 4% higher nearabouts on that stock. And then some of the banking names like an SBI, which has been a very strong show all through this week. And Kotak Bank, this was, remember, one of the rank outperformers yesterday. Today too, it's holding up by about 0.7%. And the numbers are due tomorrow itself, along with ICICI Bank. Chakri, what's the expectation from Kotak and ICICI Bank? The earnings tomorrow?
I think the earnings will be good in terms of, the loan growth will be very strong. But there will be a hit to the margins, net interest margins, because of partly depository pricing as well as the lag. But, with the economy picking up, the loan growth should accelerate going forward. And the value, Kotak hasn't really done much in the last year or so. And so it's very important that they show an acceleration in their loan growth. On the other hand, ICICI, I think the numbers will be much stronger.
Okay, so that's a take coming in on ICICI Bank as well as Kotak Mahindra Bank. But shifting focus with respect to which are the other things which are going on in the market right now, and what's going on is the entire IT debacle, because Mphasis is down 8%. It's taking down Persistent, KPIT Tech, Tech Mahindra, Coforge, HCL Tech, TCS, and the list really goes on. There's hardly any name except Mphasis, which is actually in the green. You know what, Chakri, would you use this opportunity to buy any of the IT names?
I think what happened to Infosys is probably an Infosys thing rather than a tech thing, because it's quite surprising that they cut down their revenue guidance from about 3 to 4.5% to about 1%. So what this does is basically now it brings down earnings growth for FY24 to almost a flat earnings growth. So which means going into FY25, the company should grow, or rather is expected to grow about 15%. If you do all the math, then it turns out to be about 20 times. So I think you'll have to wait for a quarter to see if the orders stalled are coming back for Infosys. And therefore, for Infosys, I think now it won't fall further much from here, but I'd rather wait because there's not much upside unless they show that the orders are actually being executed.
Let's move on and let's get in all the buzz across dealing rooms, given the pressure in the market and a lot of important numbers as well due. Sharad, what's the khabar?
Well, yes, in focus we are having Gabriel India, and importantly what we are hearing from the street is the company is expected to win a large order when it comes to the EV segment in the passenger vehicle category. Now, the company itself is an auto ancillary company making shock absorbers, and it's one of the top 10 in the world when it comes to the manufacturing capacity. And importantly, because of this order win which is expected to come in, the market share in this segment is expected to go up by more than 30%. Now, the company itself is foraying into high margin products like sunroof systems, etc. And because of that, what's happening is the ROC numbers that is expected to go up. And the brokerages have also given a thumbs up and have stated that the company itself is having a debt-free balance sheet. And ICICI Securities, in a recent report, they stated that they have a buy rating for the stock with a target price coming of roughly 260 rupees per share. Now, the key investors in the company include the names such as Nippon India Mutual Fund and HDFC Mutual Fund. And looking at the stock movement, it's near its 6-year breakout levels when it comes to the price, and the stock itself is up more than 62% when it comes from the March lows.
Point taken, but let's talk about some more stocks as well. Naresh, from the entire capital goods space, L&T of course has the support of buyback, but apart from that as well, with respect to the chart trends, would you be a buyer in L&T? And ABB Siemens, which saw quite a bit of knockoff yesterday, would you use the correction as a buying opportunity?
Not really. ABB Siemens have already moved up quite a bit. So I would be focusing out of the large names. So something like Thermax, which is going to break out in the capital goods space, looks interesting. So that is one. L&T continues to be the best one on dips. BHEL could be a contra bet that looks promising. So BHEL and Thermax would be the bets in the capital goods space, which still look interesting.
Okay, let's try and get some BTSC trades as well from our chartist. Kunal, what's the buy today, sell tomorrow idea? And by tomorrow, I mean Monday, thankfully.
So yeah, two buy calls. First one is the one Coromandel Fertilizer. The stock is coming back into a swing breakout, very close towards breaking or making a fresh swing high on closing basis, about that 980 plus marks. Would suggest a buy with 1060 as a target. Stop loss could be kept at 960. And the second would be a buy on Grasim. That stock is heading towards a triangular breakout, about 1810 marks. So would suggest a buy, targets of 1900, stop loss at 1760.
Right. Naresh, what about your BTST ideas?
Both the names from the oil and gas pack. First is a buy on ONGC, hitting a new 52-week high and a cup and handle breakout here. Stop loss at 168, target price of 178. Second is NTPC with a stop loss, more like a defensive bet again. Stop loss at 193, target price of 200.
So that's a take coming in. Quickly taking stock of what's happening across the globe as well, because it doesn't look like it's a very pretty picture. Just waiting by for the rates to update. So the European markets have started on a mixed note. So the DAX is down, but FTSE and CAC are holding up all right. And if I look at the pre-market rates from US as well, they are doing all right as of now. So just very, very flat to a bit of a positive start, at least that is what it is suggesting. But for our own markets, that whether that 20,000 is conquered on Monday or not will be decided by Reliance, ICICI Bank, as well as Kotak Mahindra Bank. Of course, there are other ones like RBL, Yes Bank, etc., which is also expected over the the weekend. But of course, these will be the heavy ones which will decide the course of the market from here on. Separately, just watching out for some other internals as well. Chakri, just wanted your take in the meantime regarding the entire real estate pack. And by real estate, I also mean the ancillaries, building materials, consumer durables, wires and cable companies, etc. What's the best theme, do you think, out of this that you would want to take a bet on?
Polycab numbers came out to be really strong. I think, that as a space, if you look at the numbers, revenue up 40%, bottom line up 80%, and very strong order momentum. So companies in that space, including Finolex, looking very strong. In spite of the stock has had a really good run up, that is Polycab. I think the fundamentals are still very intact. The business momentum is extremely strong. And so I think, Reliance Industries, Polycab.
Okay, so Polycab, that's a top bet coming in. Those are some of the lines for you on the bottom of your screen. Morgan Stanley on HDFC Live, they maintain the overweight stance with 800 rupees. But they say that the VNB is actually 2% ahead of the estimates. There was a bit of a sell-off in the stock after the release, but they're saying there's no reason for that. So maybe we'll see a bit of recovery, and that is already underway. They're saying it's a good result, prima facie. They do not see any negative, and we are seeing that reaction there as well. But Chakri, within the insurance and the ancillary space itself, HDFC Life had seen quite a bit of run up. SBI Life was on the back foot, and then there were these reports about AMC stocks also coming back to favor, given the fact that the entire TR ratio was going to be relooked by SEBI.
Indeed, but that as a space I'll still stay away from, because it's a game which is becoming one of a declining margin business, and therefore operating leverages which used to work for the AMC industry is not working because of the controls that SEBI is placing in terms of pricing. And therefore, a larger asset base does not necessarily translate into a higher profit margin as used to be the case. And I think so this industry is likely to therefore trade at a far lower multiple than it used to trade in the past.
Okay, Kunal, just wanted to get your sense on whether or not any of the names from within the IT pack, Infi, TechM, HCL, even TCS Wipro for that matter, does it show like next week we could see any rebound, or do you think there is going to be further sell-off in these names?
So, what I'm impressed about by the IT stocks today, Aisha, is that Infosys, even after such bad results, has not broken that previous quarter low, which is I think around 1200 mark for Infosys. Now, had the price reaction, which means the prices are trying to absorb all the negative news flow, and the fact that the stock has not fallen to that 1200 mark, and there's no follow-through selling, even after a gap down opening of I think 9% for Infosys. So I think that's again a standout feature. Now, hopefully by the end of the day, we'll get to know that whether there is a strong build-up of open interest on Infosys futures. If that happens, then that 1 crore of reduction of open interest for Infosys, which had happened in the last 10 days, and if there is built up of open interest, that tells you that there was unwinding of long positions, and post results after a 8-9% downtick for the stock, there could be a possibility that there would be long built up formation which could be seen for Infosys. So I would be particularly interested into buying these large cap IT names from current levels, and the fact that these stocks are not breaking past above the previous swing lows also makes the risk reward a lot more attractive. Only thing what matters over here is your time frame, because after such a kind of a sharp reaction, you would expect that these stocks would go into a bit of a slow, gradual, or a mild downtick, say over the next 1 or 2 weeks. But then if your time frame is 3 months, 6 months plus, then I think buying or starting to buy at current levels could be a good strategy.
Right. Okay, that's the take coming in on IT right now. That, of course, is the losing end of the market. But, technology is not alone. You've got Unilever as well, which has reacted to its numbers. Reliance is under pressure, ahead of its numbers. Some of the rank outperformers year to date, or for that matter of the last year, cases in point being M&M haven't gone anywhere much. HDFC Bank as well is lower by about 0.5%, and even ITC is lying pretty quiet after having a fabulous, this week. Today it's a little quiet in trade, 491 on the stock as we speak right now. Chakri, what's the call on ITC? We understand from our exclusive sources that perhaps a demerger of the hotel business could very well be on the cards, and the announcement could come in even before the AGM, which is due next month.
You're absolutely right. If this even does happen, and that would be a huge unlocking, because investors have waited for a long time now for the demerger of the hotel business, and that changes the cash flow profiles of ITC as a company, some of parts quite dramatically. And because one is an asset-intensive cash flow capex intensive business. On the other hand, one is a very operating high margin business, the cigarette business. And I think so if that even does indeed happen, I think there is a significant amount of unlocking that is yet, even in spite of all the run-up that has happened in ITC.
Right, so that's the take coming in as far as ITC is concerned. What else is happening in the market? Not much actually, it's just the IT pack which continues to be on the downtrend, but then it's taking along some of the other, new age tech companies per se also with it. Case in point being Policy Bazaar, which is down 3%. Delivery is not having a great day. Nuresh, any of these new age tech stocks that you like in terms of Zomato, Paytm, Policy Bazaar, Delivery, Nykaa?
So used to be liking Zomato, etc. A lot of those names have done well. Now delivery comes in that case, which has given a range breakout for the last 8 to 12 months. The stock was in a range of 300, made multiple bottoms over there, and then 400 was the upper end. And now it has started sustaining above 400 levels. So first indications of a bottoming out case being done in delivery. So at 380 to 400 is a zone where one should accumulate. And eventually the stock could go up towards 500, 550 levels.
We spoke with a couple of these managements from the ones which have just delivered their numbers. Let's hear out a soundbite of the same.
There was some delays in some other deal wins. And please keep in mind, 80% of our revenue roughly comes from the US, where the first week of July was a long weekend. People usually club the last week of June with that. So there are small things here or there. If you ask me, are we worried about it? We are not worried about it. A little bit moving from one quarter to the other from a deal win booking perspective, that will always happen. So no worries on that front. And we are pretty reasonably confident. We are cautiously optimistic of our growth journey, and we stay committed to that.
Actually asked for capacity expansion in anticipation of volumes going up. And a little bit more unlocking or unclogging of the decision making is visible given the pace of deal wins. We do think that we bottomed in the Q1 numbers. So we expect to see a pickup in sequential growth through the remainder of the financial year 24.
We have given, we will keep our growth rates to that tune only. We hope that we will be able to, keep the NIM at 3%, whatever we have promised in the beginning of the year.
Okay, so that's the take coming in. As far as some of these earnings are concerned, Union Bank was actually a decent set. The stock was high by around 4%, and so were some of the other PSU banking names as well. And our chartists too have been quite positive about it. But Chakri, what's your take within the entire PSU banking space apart from SBI? Which are the names that you like?
One of the things which was holding back PSU banks was the expected credit losses. Now that the RBI has clarified that they have given the banks sufficient time. And it's happening at a good time in terms of the timing because banks' balance sheets are strong, loan growth, etc., is going to improve as the economy picks up. And so, as a result of this whole thing, is at the end of the time frame when ECM is finally implemented, you will have stronger bank balance sheets, which means you'll be able to afford a higher multiple to PSU banks. So whether it is Bank of India, which I like, Canara Bank, Union Bank, apart from SBI, all these things are trading at very low multiples, and therefore, after ECM, knowing that ECM is going to be implemented, you can start giving higher multiples.
Okay, Chakri, we'll let you go on that note. Thanks as always for taking the time out and joining in today. Let's begin winding up for the day. MSCI is saying that they're looking into the MSCI index pricing. We'll get more details on that. L&T higher by nearly 4%. That's really been the one which has supported and cushioned the index today, along, of course, with the ONGC, which is also managing to close at pretty much the session highs. Almost a 2% bump up is what ONGC is closing in on. It's interesting to see the trades on Kotak Bank as well as ICICI Bank, given that they're closing in at pretty much the session highs. And ICICI Bank, as well as Kotak, mind you, have had a very, very choppy ride today. They've really been all over the place, and ICICI Bank is closing in at that 1,000 rupee per share mark. SBI as well has been a strong one today. There's been BPCL. Power as a theme has really held out all through this week, and NTPC is a key gainer. NTPC today too closes in with a near about 1% gain. There's been a Bharti, Divi's, Tata Motors. They've all been some of the large cap performers. But today I think it's really been about the